Hello traders and welcome back to another video here in our YouTube channel and congratulations to everybody still in our long in gold. Now, if you are not part of the VIP team, let me tell you what you have missed. On December 23rd, we sent out this analysis and this setup for a possible buy in gold. And the validation level was around the 1860 450 level. And if you took advantage of that trade, let me show you where it's at right now. If we are talking about a long position around the 1864.50, the entry price should be 1864.50, right? And stop losses, of course, were just below the lows around these levels. Right now, the trade is running at a massive 560 pips and has yield a 1 to 6.6 risk to reward ratio. So that is just what has happened. Personally speaking, I just took some profits at these highs because we have broken with a massive level. Now, this video is about where or what we are going to be doing next in gold. And of course, we are only looking to add to our long position, right? Why? Because if you look at the 5 hour chart, the 5 hour chart is on the bottom right of my screen. We have broken with the 1900 level. So that is a massive breakout in gold in a very bullish 5 hour candle. If Let me just zoom in a little bit and let me show you what happened here at the open. Massive breakout again, guys. Again, bears got caught in a massive bear trap. Why? Because when you see this pattern, most traders are going to be looking at selling this level. Why? Because they think that this level is going to hold. But you don't trade what you think, you trade what you see. And this is a continuation pattern. Why? Because this is a flat triangle. We already talked about this, but just to refresh your knowledge about this particular pattern, right? We had, right, a massive resistance level here, which means that a lot of sellers were positioned here. But if you look at the highs on this chart, I'm sorry, the lows on this chart, we are making higher lows, and we continue to make higher lows, which means that buyers that are in control of this market tried one time here to break out of the 1900 and were not able to do so, right? So bears push price down. But then bulls reloaded higher and they tried again, and then they reloaded higher, and then they tried again until eventually they did, right? And that's why we held on to our trade. And personally speaking, I do have my stops below these lows, right? Actually, below these lows. So what are we going to do next? Well, we're going to try and we're going to actually buy a dip and a retest of that 900 level if it happens, right? We don't know if during the end or during the London session or London Open, we are going to get some bearish price action here that is going to give us an opportunity to buy, right? But this is on the longer time frame, right? If we look at the volume profile of the last sessions, we could, the level that I'm looking for, of course, is the 1900. Why? Because it's the last session's highs, okay? This level right here. And is also this session's lows. So kind of confluence in high lows levels there. But let's go to the lower time frames and let's start by looking at the 4 hour chart and let's just draw some basic um, some basic price structures, right? So we are definitely in a bullish structure right here. Actually, let's just look at the short-term bullish structure, which is this one right here, which is actually the second after the first pullback, right? This is where we started to look for buys in gold because we do not pick low. I mean, we don't try to buy uh, lows or sell highs. We what we do is we get in on the actual trend, right? After we have confirmation of the market direction. And right now, well, we broke with the 1900 level, which I'm going to be placing right now, right here. And let's actually put on the 1900 even on this chart, right? And we are also approaching the retest of this structure. Of course, that if you saw our last video on cryptocurrencies, Bitcoin was in a similar pattern on which, of course, we were not going to be selling Bitcoin, but we were well, not expecting, but we were looking for a retest of the structure and a dip to the previous level to buy. But what happened is that Bitcoin completely broke with the structure and continued higher. But in this case, what I'm looking at, and this is the 4 hour chart, right? If we go to the hourly chart or the 2 hour chart, what I'm seeing right now is a momentum breakout and an exhaustion of that momentum. Now, the exhaustion of this momentum does not mean that we are uh, at the beginning of a bearish or an immediate bearish market or at a reversal point in the market. This only means that after bulls managed to swipe all the sell orders that were placed here, right? Because this is what happens on breakouts, right? Sellers are placed or were placed around the 1900, and the reason that we had those rejections in the past is because bulls were unable to swipe all the sell orders that were placed here, and sellers took control of the immediate move, right? But in this case, buyers were fat finger the market, right? And they swipe with all the sell orders, and this creates momentum in the market. And bots and momentum traders and scalpers, etc., they jump in on this breakout and this momentum. Tape readers too, and they scalp the market for the immediate gains that a momentum breakout yields. But because we are already long from these lows, and we were actually looking for this breakout, and because we managed our trade accordingly and correctly, it really didn't matter to us if we had a reversal, a mean reversal, because we already secured some profits, right? But now that we have seen this breakout, we are really looking for or to add to this position. So what are we going to do, right? First of all, let's go ahead again to the 4 hour chart and let's see if we have some key levels that are being retested at the moment. Now, the true key level that I see on the near future in gold is way above current price action, right? Personally speaking, when I see, for example, when I see levels of resistance, such as the one that I'm marking with my brush in blue right here, that have been broken to the upside and to the downside without any support, to me, those levels are no longer in play. And as you can see, there was absolutely no resistance uh, today on the 1913 level. So what I do is I go to the next key level. And to do that, let's go to again to the hourly chart and let's go back in historic price action, right? Just to be more precise with the highs and the lows of the moves. Now, the level that I'm looking for is around the 1931.60. The reason is because the 1931.60 was um, a big key level around October 20th, and this was the level that after bulls broke with was retested right here, right? Of course, that levels are zones, they're not actual lines in your charts. So let's go back again to current price action. We are not, or we have not yet retested this level, okay? And that does not imply that we are going to go higher. It also doesn't imply that we are going to go lower. This is just a level that I'm keeping my eye on. And the reason that I'm keeping my eye on this level is because if gold starts to form a flag right here, on let's say on the 50-minute chart, I'm not going to buy the breakout of this flag because we are way too close to that key level. That's the only reason that I have it on my chart, right? Just to plan my future play or my future moves in gold. So a flag breakout at these highs is absolutely out of the question for me. So that is why the only way or the only play that I see myself buying into is a retest of the 1900 to I'm sorry, it's right here, 1900 to 1903, 1904, 1905, this level right here. All right, so let's see, and let's put on some Fibonacci retracement levels and some Fibonacci extensions just to make sure that we are aligned with our analysis, okay? And let's look at the immediate structure in the market. So this structure was very well held by gold, and if we grab this and clone it, right? Well, you can see that this structure or the immediate structure or the hourly structure is very, very strong, right? So this is what we are going to be focusing on. Okay. Um, Now, let's see if, or let's calculate the bullish targets of the first pullback, right? So the bullish targets of the first pullback should be around the 1938 to 1940 level, right? If you've been with me for a while, you know that my targets are always the 161.8 of the pullback. That's just the way that I trade, and that's just yeah, I mean just the way that I trade, right? Um, so, having said that, uh, with current price action or gold currently trading around the 1920 level, there is a lot of room still to get to that level. A pullback to the 1900 or 1903 level would mean that gold would retrace about, if of course, if this is the actual high of the move, it will retrace less than 50% or shy of 38.2% of the impulsive move, right? Now, if we're looking at a bullish structure, the impulsive moves are, of course, to the upside. Now, this is the pullback, and this is the other impulsive move. Now, let's assume that this is the high of the impulse of the second wave or second impulsive move. So what we're doing is we're calculating the pullback from the low of the pullback or the start of the second wave to the highs, right? That would mean that we will be retracing just shy of 38.2. Now, this, in fact, does not seem crazy at all. And if we go even further, and if we uh, use historic price action, which means that if we use the last pullback as reference, right, this would mean that, well, if we use the last pullback as reference, this would mean that the pullback can go even a little lower. But the thing about this is that we are looking at rejections of a very, very strong level. Okay. Now, um, just technically speaking, what we are going to do is just wait for that, for price to pull back to the 18 or no, I'm sorry, 1900 level and to form a rejection and reversal pattern for us to have a defined risk to reward for a deep buy into this weakness for and target, of course, the 1930 level. Now, let's go to the higher time frames just to see the potential uh, of gold moving to the upside, right? Now, if we look at the 5 hour chart, right? When I look at the higher time frames, we could be looking at the daily, right? Or the 12-hour chart. But the reason that I like to look at the 5 hour chart is because on the 5 hour chart, I get the defined moves without any of the noise, right? And I get uh, the cleanest key levels in the market. And if we are looking just at key levels, right? If we're just looking at key levels, and we are looking at a deep buy around the 1900 level, and if we're looking to continue to swing trade this market, we could actually be looking as a second target, the 1960 level, which are the previous highs, right? This would mean that gold would completely erase the losses from uh, the um, the small crash at the beginning of November. Now, if we continue to go higher, right, we could be looking at the next high around the 1993, then this massive level around the 2017, and of course all-time highs around the 2075, right? Now this is of course if gold continues to rally. Now, because we can never be sure of what a market is going to do, you need to know how to manage your swing trades, and that is why, well, what I do is I just move my stops, and you have to be patient too, right? Going back to the hourly chart, right? When we started to buy, or when we bought this market, which was around these levels. I mean, we held on through all of this noise, right? And when we hit the 1900 level again, this is where we move our stops to uh, almost break even. And then after the breakout is why we're moving our stops below the previous low. Why? Because if gold actually breaks with the 1900, it's very plausible that it's going to break with the immediate bullish structure, which would mean that our long trade idea is no longer valid. But because we already took profits here and here, and we are just swing trading about uh, 1/3 of our position, it really, really, really doesn't matter if we get stopped out at a profit here. Why? Because the the possibilities of gold rallying even further are higher than the possibilities of gold breaking to the downside. Why? Because fundamentally speaking, uh, the US dollar continues to weaken. And actually, we could go and look at how the DXY is behaving at the moment. And of course, the DXY opened with a gap down. And the reason that the DXY is continuing, or the US dollar is continuing to weaken, is because of the liquidity injection that we are seeing in the United States, and we have been seeing since a while now, right? This is the 8 hour chart in the DXY, and as you can see, this is only going down without really deep pullbacks, right? And every time that bulls try to bring the price of the US dollar higher, they get smashed by bears, right? And if we go to, let's say, the 12-hour chart, let's see, no, we have to go even further to the daily chart. Actually, we have to go to the 2 day chart just to look at some levels uh, that could that could support a US dollar, this US dollar bearish market, right? We have broken with the level that I was looking at first, and right now I see absolutely no level to support this market other than the lows of January to February 2018 around the 88.50 or the 88, yes, the 88.50 on the DXY. So we are looking at more downside on the US dollar, which means that this is going to be bullish for gold, right? So this is the analysis on gold. If you want to get the exact uh, analysis and zones, there's a link below this video for you to subscribe. Thank you and have a great trading week.